High yield is a key segment of fixed income, and we will analyse the opportunities available to investors with Donald Phillips, fixed income manager at Liontrust, who is our guest today at FT headquarters. Donald, is this a particularly good time to be investing in high yield?
There is never a bad time to be invested in high yield. I think it's an evergreen asset class. Now, of course, there are times when yields are higher and lower, the valuation opportunity is better or worse. And I would say right now, due to years of quantitative easing, yields are low, so the average yields on offer are well below historical standards. But to me, that is not a reason for anyone not to own high yield in their, in their savings portfolio or their client's portfolio.
So how do high yield returns compare to those from major equity indices?
If we take 2019 that's just come past as an example, high yield produced excellent double-digit returns, very similar to the returns of the FTSE 100, to the Nikkei. Your major global equity indices produced very comparable returns. And as we know, the returns in 2019 were teed up by a period of volatility in Q4 2018. You had 10% plus drawdowns in the equity market. Well, high yield produced half the drawdown of the FTSE, for example. Less than half the drawdown of the Nikkei. Significantly, a third of the drawdown of the S&P. And actually, it's not just 2019. If you go back long term, take in the financial crisis, the average annual drawdown of the high yield market is significantly lower than that of the equity market, yet returns are fairly comparable. So therefore, the risk-adjusted returns of high yield are fantastic versus the equity market.
There are some negative connotations of the junk bond associated with the financier turned felon turned philanthropist Michael Milken. That history, is that unhelpful for the image of the high yield bond?
I think it might be. It's a playful nickname for the market, that's for sure. I wouldn't get hung up too much on junk being used as a nickname. But I find, media, when they want to write an article that's prodding the state of the current cycle, when we're all being responsible about what's going on in capital markets, I think one of the easiest markets to poke at is the high yield market. Around about the same time I started investing in the high yield market professionally, I was fortunate enough to be able to get myself on the property market with a 100% mortgage and bought a flat in central Edinburgh. Right before the financial crisis, it took 10 years for that property to be back in the black. But if you'd invested in high yield just before the financial crisis, through the worst period in generations, you were back in the black within 12 months. But this resilience is not discussed in the media. It usually is risk, stress, illiquidity that's discussed. And not to be too defensive about the junk bond nickname, but I do think there needs to be a more balanced appraisal of the high yield asset class in the media in general.
But there seems to be a view from some market commentators that when there are problems in the market, these are manifested first in the high yield segment.
If there are signs of risk aversion in financial markets, the historic experience is still for the high yield market drawdown to be significantly lower than equities. People perhaps worry about liquidity in that risk-off environment. And then if anyone listening to this has clients who will exit for the door at the first sign of any trouble, then maybe the high yield asset class isn't for them. The high yield asset class is about long-term investment. It's about good investment decisions. It's about building a portfolio with true diversity, avoiding sectoral thematic risks that can put a big old hole in your portfolio at the worst possible time. If you wanted to refer to the high yield market as a junk bond market, well, what do you think the average market cap of our high yield bond fund is? It's roughly 80-85% stock market listed. So of those companies that are stock market listed, the average market cap is $24 billion. That's the average market cap of the FTSE 100. Media isn't writing articles about the equity market being junk and lacking in quality and full of stress and danger. Actually, the high yield market's an excellent asset class, full of mega caps that guys like me and teams like ours can invest in.
So we need a more flexible mindset to truly embrace high yield investments.
I think so.